Hi, everyone, and welcome to today's podcast on reshaping wealth and banking for affluent clients. I'm sure, like me, all of you enjoy wealth and wealth creation. While wealth creation hasn't fundamentally changed, but the way in which we interact with one another and the way in which relationship managers interact with customers to share information and insights has gone through a bit of a change over the last 18 months. Banks, on their part, are also taking a discretionary effort in making sure that there are more channels of engagement between wealth specialists, relationship managers, and clients. And for that part, they give all the right information to clients in different ways and create different and novel client experiences so that clients can feel that their wealth is safe, protected, and more importantly, has enormous upside for future growth. With me today to talk about how wealth management for affluent banking has fundamentally changed and how certain things, while they remain the same, take on a different avatar. I'm very pleased to have Nakul Jain from Standard Chartered Bank with us today. Nakul is the Managing Director for Private Bank, Priority and Deposits at Standard Chartered Bank. Nakul, thank you so much for joining us today.
Thanks, Karthik. It's a pleasure to be here with you.
Absolutely. So, just to give everyone a quick walkthrough, Nakul has been in the banking space over the last two and more than 2 decades now, spearheading multiple leadership roles in various aspects of retail banking, not just within Standard Chartered, but other banks prior as well. And I thought it would be great for us to have his perspectives on how wealth and affluent banking has changed in the last 18 months. And more importantly, how does he see the space evolving in the next 3 to 4 years going out? So, with that, Nakul, let's start with perhaps a very fundamental question to begin with. What is the way in which, from your read of the industry, the beliefs and expectations of wealth management have changed as far as clients are concerned since the pandemic?
Yeah, thanks, Karthik. I think that's a very relevant question. Before I jump into really answering how the wealth needs of the clients have changed in the pandemic, I can tell you that the way clients interact with banks has completely changed in the pandemic, and I think that's something has been a delight. As soon as the pandemic started, we realized a lot of clients who never used to believe in the digital mode of interacting with RMs slowly started to move towards that. And we've seen a sea shift in the way the clients today want to interact with our RMs. I think that's been one very, very big change that we've seen. And more, that's given confidence to the industry to invest more and more in the digital capabilities to make transactions and interactions much, much easier with the clients. Very quickly, moving to how we see the behavioral trends changing. I think one big change that we've seen is the shift from monetization of fixed assets like real estate and gold to financial assets. I think that's been one very, very big change. Move from more traditional banking products to comprehensive and contemporary banking solutions, including risk management, lending, and estate planning. Also, a lot of experienced investors are warming up to some international trends and ideas like investing in ESG, disruptive technologies, and global diversification through international funds. Also, I think there's a huge gap in planning for retirement. Despite over half of the consumers expecting to retire before 65, a third have not even started saving yet, despite anticipating depending on investment income in the retirement space. That clearly suggests that there's a huge gap in the current actions and future expectations.
Right.
Right. I think some of the other things are the sustainable investments. A lot of HNIs have preferred philanthropic solutions. Many of our clients have started to worry about legacy to support future generations. Internationalization, that is not just looking at one country, but looking at across borders to invest. And of course, finally, the whole private and the business needs are intermingled. So clients are looking for one solution from their banks. So I think these are the key changes that we are seeing with our clients. Also, the fact that clients are happy to look at a digital solution, whether for investments or for their servicing needs. I think these are the key changes that we are seeing in the way clients are looking at their wealth needs post pandemic.
Very, very interesting, Nakul. It sounds like with this whole change in how we do business in general, what I hear you say is there is a sea of opportunity out there, both for clients to capitalize and as well as for banks in the wealth management space to sort of take advantage of. Right, so you talked about the movement from fixed assets to other financial assets, and also the fact that now, as things become more digital, opportunities to also partake in and enjoy investment upside, not just in domestic opportunities, but international opportunities is also there. And how there's an increased awareness to doing investments in other aspects of what would have otherwise been deemed not possible in areas like sustainable investing is also coming to the fore. But tell me, as wealth is also getting transferred between generations, right? So we've seen a lot of money exchange hands between first-time entrepreneurs and business promoters, and even people who have in their families accumulated wealth. As it gets passed on, are you seeing a different priority or a different way in which people one manage and expect their services to happen from companies like Standard Chartered Bank? And what I mean by this is the newer generation is, as we all know, more digital savvy, for example. And they may also be less loyal to brands than what maybe a couple of generations prior to us would have been. How is all this changing the way in which you are expecting your relationship managers to better have a trusted relationship and be more of a partner in the whole conversation?
Yeah, so Karthik, I think in the coming years, trillions of dollars of wealth globally will exchange hands. I think this is going to happen over the next decades to the younger generation. That's clearly something that's going to happen. Now, the younger generations are usually much more aware, educated, and have a higher understanding of worldly matters and, of course, the wealth management issues. I think that's something we are clearly seeing. Many are keen to innovate through entrepreneurship or sustainability in family businesses and in their financial investments. Clearly, digital is a new norm for the next generation, and you rightly called it out. They want greater control in their hands to analyze and slice and dice. This is exactly what our new wealth management platform, which we call the SC Invest, enables them to do. They need a proposition that talks to them. They need solutions that move with them as they are global hopping citizens. Very comfortable with technology. So, technological breakthroughs and how quickly we are adapting ourselves to fast changes is something that we are trying to integrate. I think also many of these clients are very comfortable in phygital, which is a mix of physical and digital channels. So they're looking at integrated solutions or what we call the tailored solutions. I think banks will also need to have the ability to adopt new technology through open APIs and modify the processes that enable digital transformation. I think with all this, also, I think the new generation is very, very careful about cybersecurity. And I think that is something that is a natural need of the hour. And I think banks are really making a lot of effort to invest there, including SCB. Right. The entire payment mechanism is also going through a sea change, and we see a lot of changes coming through every year, both through the industry and the environment. And finally, the traditional forms of communications are being taken over by more digital media consumption on the go. And that's how we would like to communicate with our clients and make life very easy for them. So I think the whole physical channel of communication is moving now to video conferences, webinars, podcasts. I think clients are extremely comfortable. So I guess the new generation is very, 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 very quick, very fast, adapting, very technological savvy, on the go, right, and really ready to take matters in their hands. So I think very early they're happy to have a relationship manager. That's something we used to see very late in the earlier generations, but the new generation is very, very savvy for RM. So I guess Karthik, that's how we see it.
Right, and just to ask you on one point a little bit more in detail, right, Nakul? So you mentioned that the whole mode of communication and interaction is now digital. I remember back in the day, and this is not too long ago, right, where you would expect wealth managers or RMs to meet you at your office or in your home and sort of walk you through these detailed market commentaries, charts, and analytics to sort of give you a rundown of where the market is heading, what are the opportunities as they see it, and whatnot. I can also imagine some of these conversations being a bit challenging in a digital environment. And for that matter, the other complexity is, like you rightly called out, today's generation of new age investors or wealth people looking to grow their wealth are also savvy in perhaps doing certain things on their own, through self-service platforms. How do you see this changing the DNA of what a wealth specialist or a relationship manager needs to do? How does this ability to stay agile and communicate across these different channels become a skill that you are seeing your RMs need to build?
Yeah. So I think what we've done is we've invested one clearly in digital channels, and because we appreciated when the entire pandemic happened that this is the need of the hour. So very quickly we innovated. Within 2 to 3 months. First of all, we got the entire service architecture on digital channels, and that's something clients really appreciated. We also launched our digital onboarding. Within 4 to 5 minutes, accounts would get opened. We invested in a single wealth platform to create an enhanced and consistent user experience. Clients were able to not only analyze their portfolio, customize it, and also get market insights on wealth and further needs. We also went ahead and invested in our FX online capabilities, making it very convenient for our clients to remit funds. Like I mentioned, we added almost 20 new enhancements digitally. Clients could, amend their address or liquidate their term deposits at the click of a button. A lot of the engagements with our clients went online. So I think that's something the relationship managers and the wealth specialists also evolved as the time went by. A lot of expert market insights were sent digitally through podcasts, what we call the money insights. That's something the clients really appreciated. A lot of our journeys were personalized. We also not only invested in this, but we also invested in a lot of client centric and very nimble data and analytics, which really helped our RMs to engage with our clients at the go. Simultaneously, I think we invested a lot on predictive modeling and AI. That's something that's really given us a lot of confidence. And finally, I think we're launching in a capability called the My RM. It's a capability where the RM can engage with or rather the client can engage with the RM and a series of specialists over a secured platform and close transactions digitally without really meeting physically. I think these have really given confidence to the RMs and the clients that we really don't need to meet anymore just for the sake of closing a transaction. I mean, a client should prefer to have a cup of coffee with the RM if he needs to, but I think just for his financial needs, clients are more than happy to now do transactions digitally. I think that's a big change that we are seeing in our clients.
Understood. Understood. So, one of the things I heard you say is that the platforms or the approaches in which clients can interact with RMs has firstly increased. Second is certain basic things that they needed as part of their wealth transactions or requirements, which earlier necessitated them to, let's say, come and visit you at the branch, can now be done online more seamlessly. And I think the other thing I heard you say, which is a key takeaway, is more investment and more focus at Standard Chartered Bank and others has been in predictive analytics, in data modeling to try to really understand where is that additional alpha that we can suggest to our clients. So very, very interesting takeaways there, Nakul. My last question to you is in the age of hyper personalization, where every client might also have unique requirements which cannot be clubbed and put together as a persona. What do you think are key opportunities as well as maybe some areas of concern that you believe banks need to tread carefully as they look at capitalizing this new market dynamic?
Uh, so one, the opportunity is immense. Like I said that in the era of physical meetings, the RM would just be able to meet, say, in a city, in big cities, like a couple of customers in a day. but the way that things have changed today, the RM is able to interact with many clients in a day. Also, every client has started to matter. That's something which is a very, very big change that we've seen. We've started to look at client details very, very closely, look at analytics around how to engage with clients more meaningfully, invest in our digital platforms to make client life easy. Uh, if you really ask me in short, the time that is available to the RM and the time that is available to the client, both have become extremely, extremely precious. And I think we are able to utilize our times very meaningfully. That's one very big change that we've seen. Some of the key concerns that we are seeing in our investors is clearly on on the falling bond and the cash yields. Clearly, investors who are debt oriented will need to go up the risk curve either by increasing allocations to equities or lower the quality of bonds on high durations. In our view, increasing allocations to equity, which does well in the rising growth and inflation environment, can really help boost their yields. Pure fixed income clients can be selective in taking risks and raise allocations to corporate bonds with tilt towards high yielding AA or single A rated bonds, given a likely revival of the credit cycle and more attractive valuations compared to AAA. Second concern clearly is around markets, and been seeing new highs being hit every day. What is the right time to exit? I think that's something is a clear concern of our HNIs. In our views, I think sticking to one's asset allocation is the key during volatile times. In general, across all asset classes, investors need to recalibrate their expectations on returns. Overall, absolute valuations are rich, fundamentals remain strong, and we believe it's a great time for equities. Also, equities are not expensive compared to bonds, cash, or even gold. And finally, we have a preference for cyclical and value strategies. On gold, I think we believe that 5 to 10% exposure to gold is a safe haven for our clients. And on currency, we believe that over the next 12 months, the US dollar is likely to depreciate as the growth recovery broadens to other markets. So that's how we see, Karthik, some of the concerns of our HNIs and how we are working along with them to answer them.
Great. Thanks a lot, Nakul. Well, there you have it, folks. Some good, sound investment advice also for all of us to pay heed to in the next 6 to 12 months, along with obviously what we heard Nakul talk about, which is the changing landscape in how wealth management is considered, both from clients as well as from banks like Standard Chartered. We also talked about in the case of new age investors, digital savvy investors, how is this interaction with between RMs and clients likely to change or is already changing, and what are banks like Standard Chartered doing to sort of stay ahead of the curve and continue to be a pioneer in the new normal. And lastly, we wrapped it up by talking about certain opportunities that are there both for us to make money as potential investors, as well as ways and means in which banks can better navigate their clients and give them the right and sound advice. So, with that, Nakul, thank you very much for joining us for today's podcast. I'm sure everyone will find your insights very valuable. And for all of you watching, stay tuned for our next episode. Thank you so much for watching.
Thank you, Karthik, and thank you, everyone. Have a good day.